Hello, everybody. Welcome to the Family Life Discussions called In Good Company. My name is Alice, and I am the co-founder of The Family. At The Family, we believe that anyone can become a great entrepreneur. So with my team, we are supporting founders, creators, geeks, doers in making their dream come true, wherever they are. And today we are supporting entrepreneurs through a 6-week program. And during this intense period of collaborative as well as super focused work, the entrepreneurs are pushed to build something people really want, accelerate their product market fit, define and test their go-to-market strategies, and of course, raising funds with top and global investors. And our deal is simple. The family supports you in exchange of 5% equity. We've been helping founders for 8 years now, and you may know some of them like Algolia, Payfit, Fretlink, Luco, Soshape, Vibe, or Preply. All right, I'm with my dear co-founders and associates. I'm in good company, and that's why this live discussion is called In Good Company. We are together for 1 hour, and we'll discuss about cool startups, recent news that caught our attention, and you'll be able as well to participate, to ask all of your questions. If you want to pitch us, you're welcome. If you want to take part in the debates, you're welcome. And I'm grabbing also the opportunity to let you know that this Thursday, my friends, this Thursday we'll be running a workshop on fundraising. Okay, so if you are in this process, you have an early stage startup, this workshop is made for you. It's free, and we'll make our best. We'll do our best to make it accessible, so you can really grab the mindset, the process, and the tips to start fundraising in the right conditions. Check The Family on Twitter. It's _The Family to get the link and to join our event on Thursday. All right. I would like to start by asking to my dear friends right here, how do they feel? How do you feel? Okay.
I'm excited to show that I have other rooms apart from the very ugly kitchen I was in last time.
Oh, poor Matthias is still in Paris while Daedalium is on an island right now.
You too.
Yes, true. And Nicolas is in Germany. Where are you, Balthazar, again?
In the Alps. In the bunker.
Oh, yeah, all right. Okay.
Nicolas is in the bunker in Germany.
Yeah.
It's snowing hard. It's snowing hard. Okay, right. I would like to start this conversation by talking about how to predict the future. Is it even possible to predict the future? So everybody thinks that building a startup is about predicting the future, while actually, and it as well, it's actually copying with the present and building the future. And we were talking about that just previously before starting this live video about the hardware startups. The hardware startups right now are really going through a very hard times because of a shortage of raw material. So every hardware startup, because they are not the priority on the list of the service of the raw material providers, they cannot build their stuff. They cannot deliver their product to their users. And just this thing that is happening right now could have never been anticipated. And we always think of all the reasons that will make that will cause a pain for a startup, and we cannot actually anticipate what will make the startup a success or not. And I was thinking as well as of Hopin, for instance. We've been using a lot Hopin as a tool for us to create our online events. And Hopin was created maybe just a few months before COVID. And definitely COVID boosted their growth. So I wanted to have your views, guys, on this, on is it possible to predict and to anticipate what will happen for a startup and what will make their success or not? Ous, I know you want to talk.
Yeah, I think one of the issue here is to not try to think too much about the future, but try to be really adaptable. For example, recently, all our startups in hardware are struggling to get microchips. There's a big shortage of microchip around the world. There is a problem in the supply chain in China of microchip. Anyone that tried to buy a component right now is struggling. One of our startups took an intern that his only job is to go on Twitter and ping every kid with a computer to do video game and offering him 4 times or 5 times the price of the computer just to find the component. So it's totally crazy, and no one that invested in this company would have imagined that their job will be about becoming supplier in electronic component. And of course, it's how adaptable you are to the situation and refusing the situation that make you strong as an entrepreneur. And sometimes fate can be on the right side, like with Opin, sometimes it's not. But the best way at the end of the day to predict the future is still to build it. It's still to be very actionable as an entrepreneur and be able to do as much as possible by yourself, whatever the condition outside are.
Yeah, it reminds me of a crazy story I had heard about, I think it was Google, maybe it was Facebook, that struggled to get servers to cope with the growth that they had. Yeah, I think it was Google, and so they had people, the only job that they had was to go and buy the servers from other startups and to ship them back in their own warehouses to be able to cope with the traffic that was rapidly increasing.
So, I heard an even crazier version, which was that Google had commissioned trucks that were moving around Palo Alto and Menlo Park and the surrounding towns to buy any computer from anyone that didn't use it anymore and bring them back to the warehouse so as to parallelize them and scale the business.
So basically, we are always talking with founders, and you as a founder, you are also checking people and trying to see if it's going to be a fit or a misfit, and rather than judging, if I may, the people based on the context, you judge the people, the founder, on will they be able to transform their context, to adapt to their context, and to distort in a way their reality. See what I mean?
Yes, I think at the family there was a poster that said, "No plan survives the battle," and we haven't seen any startup that decided early on what they were going to build that actually built exactly what they had planned to. The main skill for founders is to adapt the context, to change the product, change the way they distribute it, depending on how things shape up.
Yeah, by the way, in a more general way, it's also a conversation about dogmatism. There is this kind of mundane view of what an entrepreneur is, someone that has this very strong idea and he make this idea happen, when actually it's more complicated than that. Most of the time, this idea change a lot over time and adapt and transform. And if you are very dogmatic as an entrepreneur, there is very low probability that you are going to win. It's not a dogmatic job. If you have a very strong opinion about reality, always find a way to remind you that you're wrong.
So you're looking for humility in a way in the founders. You want to welcome to the family, for instance.
Yeah, I don't know if it's linked to humility, because you can be very cocky and very very confident in yourself, and at the end of the day, changing your mind if new data. So I don't know. I will not link that to humility. I will link that more to this passion for winning instead of being right. And I think it's one of the things is that you pitch your startup a lot. And one of the problems you do when you pitch is that you start to believe what you say. And so then you have these two different phases of doing your startup. You have the pitching moment where you go and you preach, and then you have the doing moment where you face the reality of what you preach. And of course, there is always a gap between both, because most of what you preach comes from conviction, and this conviction can be misled by something you did not understand before experimenting. Sometimes you need to experience things to understand them. And you have the feeling from the outside to understand them, but actually you don't. It's just when you try that you realize that you are wrong about something or not. And if you are at this point not able to change your mind, and even worse, sometimes people around you buy your pitch so much that they resist that transformation. And that can be really dangerous for an entrepreneur.
So last Friday, I invited for a talk to all the founders in our current batch, a guy named Vaughan Tan, who's a professor of business strategy in London, but also the author of a book called The Uncertainty Mindset, which is all about what you should do as an entrepreneur, as an operator, in a context of radical uncertainty, but all inspired by what he observed, because he's a behavioral sociologist in the kitchens of the best restaurants in the world, because restaurants are a lab basically to experiment with uncertainty in an industry that's changing a lot, and with expectations that are changing a lot every day. And so what Vaughan explained basically is that when confronted with uncertainty, and the world is definitely becoming more uncertain as time goes by, you need to divide what you're doing into small incremental steps, and make it so that at every step you need to be able to learn something. Maybe it will be a success, maybe it will be a failure, but the most important is to learn something from what you just did in order to move to the next step. What guides you along this journey is the narrative, the vision that you have for what the future holds. And when you divide what you do into these incremental steps, you realize that the future indeed can be built instead of it being a given, as Usama just told.
Yeah, I think that's one of the secrets of startups, is that we actually don't decide anything for them. We help them make decisions faster. And the important is not to be right, is to decide fast and to learn from every mistake. And if you do that sufficiently fast with an overall plan, a multi-year plan, you end up going into the right direction.
Yeah. Guys, I have a question for you, okay? So basically, if you have to choose among 3 different service providers, okay? And you know that approximately they will cost something like 50K minimum per year. What do you do? 2 possibilities. Possibility number 1, you interview each of the service provider and then you trust your gut feeling. Or 2, you run interviews, of course, and then you try to get data point and feedback directly from their clients. Answer is obvious.
Yeah. No, I take option D. You know, it's famous meme on the internet. I take option D. No, yeah. So what do you do, Alice?
What I mean by that is that you will say, okay, Alice, of course, we run interviews, but not only. We will get some feedback directly from the customers and some data points. And the thing is that everybody says, okay, it's answer number 2, but when it comes to hire new people, we never do the reference checking. If I look at the batch of startups that we've been accompanying for years, based on our experience, when they hire new people, they have a really big and long process of at least 10 different interviews, etc. But they won't pick up their phone and call at least 4 ex-coworkers and make sure that these candidates fit or misfit their needs. And if I'm talking about that, it's because I'll open this conversation on the risk and on anticipation. If there is one thing that you can anticipate, it's what you control. It's your team. It's the people you hire. But still, I don't see the founders doing properly the reference checking process. And I'm talking about this because we have a startup that joined our new batch at the family who really directly is solving this problem. It's called, so basically they automate the reference checking, and they allow you to evaluate at least 4 different feedback from ex-coworkers and to make the right decisions. And for me, they are the solutions to this big risk, which is hiring the wrong people or hiring people with who you won't really fit on the long term.
The funny thing about this reference check is that it's a very European problem. By the way, a very southern European problem, because we don't have this culture of trustee.
We even had when we were making the first introductions to potential clients for Refty, we even had one of the founders of a pretty famous Parisian startup who essentially said that not taking reference calls was an ideological statement on their part, and that they considered that anytime they were recruiting someone, they had the opportunity to a blank slate, which when you think about it is weird, because it's true that you shouldn't, it's not because something went badly with one previous employer that you can't consider hiring someone. The employee might have loads of good reasons for why it went badly with that person. But you do put a lot of weight on your own personal judgment and just a few minutes or maximum hours of interacting with that person versus benefiting from months and years of co-working with the other person. It was really funny because it was one of the most exuberant responses we ever got from any sales intro that we could have done. It was like, felt like we'd struck a nerve of, no, we will never ever do these reference calls.
But I found you a bit harsh about him, because his argument was really good. Because argument was not so much about the quality not so much about the process of the reference, but more about the fact that most of the reference work he did in the past end up with people lying because they were friends or lying because they hate the guy. And so he was saying something very interesting that I felt as someone doing reference on people, is that we are in a Latin culture where you are on my side or my enemy. And if you are my enemy, I cannot recognize any quality inside you. And so if I call you, you are like the worst guy that ever happened to be born on earth, or you are my friend. And in that case, I'm never going to say anything about you. And I'm just going to bullshit until you get hired. By the way, I talked with him on another subject, and he told me this very funny story where he reference checked a candidate and 3 people told him exactly the same sentence, because the guy wrote the reference, and so the people were reading over the phone the thing. So, and it was interesting because I think it's interesting as a team building a product that feel like a global approach. I think we will have a lot of localization challenge, much more than we imagine.
We have a question from Stefan, who is saying, Do you think it's a good approach to have a team composed mainly with freelance members? I know you have some ideas around this. Maybe Balt, you want to talk about this?
Go ahead, Balt. Good luck.
Yeah, it's a topic that comes up quite often. What we want, we advise all startups we work with is to keep everything that's core business internally. Often it means the product, then it means the go-to-market. And so if punctually you need a freelance that does one thing and another, why not? But I don't think you can be called a startup if everything you do is external people. Because one thing for sure is that you're not going to compound on knowledge, and everything that you're probably going to lose most of the information that you need. So please don't do that. If you need freelancers to get started, why not? But otherwise, just hire a small team of highly capable people that are builders and that do believe in the vision that you have and are going to commit 24/7 for the next 2 years. Not people that are looking for the next gig at 1,000 a day.
And just on a very practical level, freelance, what Balthazar was saying when you meant freelance is more of a like arrangement with the person or a statement of their intent rather than any form of labor law contract or like employee contract. You don't have to actually employ the people. You can do whatever kind of structure. But it's more like the actual intent of the people that you're hiring.
Good answer. Go for it.
I was saying regarding the reference calls and something that is actual is the diversity. I recently had a chat with a founder, and he was saying that diversity was a very bad thing early on in startups. And so he mentioned that he was fearing to be cancelled for saying that. But what he meant was, like, if you're a 25-year-old founder, you need to hire the people you understand best, which probably are other 25-year-old people, and build a team of like-minded people that are going to be able to go through the ups and downs of the business in the beginning. And that, of course, that creates some sort of lack of diversity, even if it's just regarding the age of people. And I think that it's a way to do reference the people you try to hire. It's to hire people that look like you. I'm curious to understand, to know what you guys think about it.
I totally see what you mean, but there are different phases in the startup growth. And at the beginning, you want, for sure, to be surrounded by people who directly understand what you mean when you talk. So sharing the same culture. And it comes down to the same age, the same background, etc. So the problem is that when you grow, you need to escape from this conformism in a way. And another thing that I see is that if the founding team were more diverse at the beginning, in terms of background and age, then it will be easier later to open. Oussama, I see that you're struggling not to to sleep. What time is it on your island, man?
It's almost 11 p.m.
Oh, that's why. But what do you think about that diversity versus keeping the culture clear for everybody?
I think people are very unequal about this, in the sense that I think this advice, it's really good advice for people that don't have management abilities. And so if you are struggling at managing people and making people feel integrate, it's good to not have too many problems in the same times when you're an entrepreneur. So if you are struggling on product market fit and management, it's hard. But I see on the other side some founders that are really good with people, and they are really good at making very diverse people working together. And this kind of team have also the benefit. It's a bit like IDEO against Google, everybody is a PhD and total geeks, at least at the beginning of Google. So IDEO was this very weird thing where you had an anthropologist and a guy that was just doing bicycle for 20 years around the world, sitting next to a mathematician, things like that. And I think it's because Tom Kelly was really good at managing diverse people. So it comes down also to this thing that most of the advice you hear and most of the things you hear are always with a certain assumption in mind. And the problem is to list all these assumptions to be able to see if they fit what you need at this moment or not. Sometimes we give advice to startup talking to post-product market fit startup. And for us, it feels obvious that it's post-market fit. And then the pre-market fit startup will take this advice and think that's the right things to do. And the diversity thing and culture thing is also very unequal to who you are as a founder. And so you should always ask yourself what you are good at and what you can do.
We have a super cool question from Julien. Hello the family. I'm open to remote employees all around the world, but how to manage work contracts? Julien, we hosted a super cool event just on that matter several months ago. And for me, the right solution might go remote.com. If you check remote.com, you have the legal, it's all the different documentations that you need to offer properly remote hiring wherever the people are based in the world. So remote.com, and not just on the paperwork side. I think the harder part will be to build the cultural basis for all these different employees all over the world. And on that also, if you check on our YouTube channel, actually, hiring from anywhere. This was the name of the summit. Hiring from anywhere. You have a lot of very interesting presentations of tools to run international teams from scratch, from the beginning, not just because you expand. All right.
Just about this, there is also there is remote that is super cool, but there's a lot of other startups. And for example, we love also Deal that is trying to solve this problem. There's a lot of startups that are trying to make that very easy.
Another one we worked with at one point is called Boundless. There's quite a few.
Yeah, Deal, DEL, letsdeal.com, global payroll and compliance for your international team made simple. All right, guys, I'd like to switch to another topic. Actually, last week, Nicholas, you've been interviewing someone, and I'd love to talk about this interview because you've been focusing on liquidity and exit strategy, and even when founders are not building the startup just only to be rich, but it's part of the process, still they have to bear in mind what's the logic and the mechanism behind, especially if they want to raise funds in the mind of the investors and how they expect to make a return on their investments. And maybe you could talk about that.
Yeah, so exits matter for everyone, basically. It matters for founders who really see exits as a sign of success. It matters for investors who want a return on their investment, as you said, and it matters for the entire ecosystem because exits generate liquidity, which in turn turns into wealth that can be reinvested in the next generation of startups. And so last week I had a a very long conversation with a guy named Pascal Lévy-Garbois. So he's a French guy, but very interestingly, he made his entire career only in Silicon Valley. For 10 years as an operator, he was the first non-founding executive at Checker, which is a company that specialized in background checks. And on the side, he has been angel investing to this date more than 120 startups, all of them in the US except for one. So it's an interesting profile because he's French. We can totally relate to what he says. He knows the tech in Europe, but his entire focus as an angel investor has been in Silicon Valley. So we can really explain what's going on there. And the most important message that he shared with me, I think it really matters who you sell your startup to, whether it's another startup that's still growing or a mature tech company or an established corporate. And all these alternatives are not equal in terms of potential upside. And also it matters if you sell your startup in exchange for shares of a company that might still grow, and then the price you're paid eventually turns into a much higher price later on, or in cash. And the problem we have in immature ecosystems like in Europe is that everyone really wants the cash. So for instance, if you have an early opportunity to sell your startup to a larger company, whether it's a tech company or a mature corporate, you'll be confronted with a lot of pressure from your investors, from the investors in your cap table, because they really want the cash. So they don't want you to negotiate a deal in shares. But what Pascal told me is that most of the money he's made in angel investing was made because startups he invested in were acquired by larger tech companies in exchange for shares. And then those shares went on to be worth a much higher price once the acquirer went public through an IPO. So Oussama, you basically explain the different outcomes in terms of who buys your startup. And
yes, so what I liked from this article is this thing where you say that the best thing that can happen as a startup is first to never be acquired in IPO. And that should be your goal as an entrepreneur. You should be very ambitious. And then life comes on the way and things never work out like you think they will work out. And then you start to think about, okay, I'm never going to make it. I'm never going to be that able to be independent. What should I do? And then the exit strategy becomes the big discussion. The funny thing is that since we started the family in France in 2013, going in Eastern Europe, going in Asia, startup in South America are exactly the same. The obsession is always from every government, every tech system operator, how can we make our startup get acquired by incumbents, by big corporate that will give a little bit of cash. The funny thing is that there is two things that are big problem. First, cultural misfit. There is a very big cultural misfit. I remember one of our startups that was supposed to be acquired by a big French company. And I remember being in the meeting and having the VP of the company dividing the money they were offering by the number of months that the startup worked, and saying it's not possible to offer them that big salary. Because in the cultural view of these people working in executive, they were comparing that to their own salary as an executive of a big company after years of struggle. And they were looking these two 24 years old or 23 years old and saying, I cannot give that much of cash. And so, of course, that kind of problem, you don't have them if you get acquired by startups. So option number two is that maybe it did not work out for you as a startup, but it will work out for a startup. So if you exchange in share, merge with someone, maybe it will be a winner, it will IPO. Then if that is not an option, being acquired by a tech company still has room for growth because tech companies are growing. And then the incumbent strategy should be the last option. And I think we should not lose aside that we need more very big, large company. I was doing in backstage a joke that a 100 billion startup, it's 100 times 1 billion startup. A 10 billion startup, it's 10 unicorn. So of course, we need outside the US this kind of company. And if you look at China ecosystem, one of the things that is really not speak a lot about China ecosystem is that they have this kind of giant company that manage M&A and manage growth and are able to attract top talented entrepreneurs. It's not just that they have a lot of money for startups. They also have very big winners that work as a magnet.
Cool.
And so just to put some figures as an illustration, so Pascal had invested in a startup that was acquired by DoorDash back when DoorDash wasn't a public company yet and was worth $1 billion. Today, as a public company, so they did an IPO last year, and today their valuation is $50 billion. And so to this day, he hasn't sold his shares in DoorDash yet, but his multiple is 30 times his initial investment in the startup that was acquired in DoorDash. And you see the difference. He would have made maybe 2 or 3 or 4x if he had sold in cash at the time. But waiting for the acquirer to grow and eventually go public, like DoorDash did, you can make a much higher multiple. And when that value is eventually realized, you can invest a lot more money in the next generation of startups. So it's really important to always bet on growth and be extremely patient because the very high multiple are always realized over the long term.
Guys, we have a question from Cyril. I was wondering, can we apply to April's batch even if we do not have a lot of customers yet, meaning that we are currently looking for our first customers? And another question from someone who is based in Poland and is asking, can I apply to the family's batch even if I am based in Poland? Balthazar, these 2 questions are for you.
Thanks for giving me the mic. Yes, you can always apply. We like to start relationships with founders at the earliest stages. It's where you set up the foundations of your business and where we are most helpful to guarantee that you have the right track. So MVP stage, first users, wherever you're based. Now that we operate a fully remote program, we work with companies here and there, here being like the Philippines to Israel to France to South America. And we're really open to having founders from other geographies, especially bullish on Eastern Europe. We just saw the recent fundraising from UiPath, a startup from Romania. So yes, please do apply. We answer as quickly as possible to all the applies.
Cool. And we have another question from Julien, who is wondering if we have the experience of companies who are using continuous organization, Fermint, Thibaut Fabre. What is your thinking otherwise about it? I'd be very interested to know what Fermint is for. Maybe Ous, you want to answer that one?
Or Nicolas, he wrote about it.
Nicolas.
Yeah, Nicolas wrote about it.
I'm happy to share the article that I wrote about them. But basically, Fermint provides you with a financial instrument to invite as investors in your cap table people that are your stakeholders. So for instance, if you're Uber, you can offer shares of Uber in an indirect way to the drivers. If you're Deliveroo, you can offer shares in Deliveroo, again, in an indirect way to the couriers. And the idea is to, so far they're doing it exclusively in the US because they're relying on regulation that's very constraining and that's very specific to the US, whereby you can invite investors on retail markets under certain conditions, and then you can organize secondary transactions for these investors so as to provide them with liquidity and not having them trapped in your cap table over the long term, because that's really not what that kind of people is looking at. And all of that is relying on an infrastructure that's been developed using blockchain technology. So it's not crypto per se, because if you look from the outside, you don't see anything crypto, but it's made possible as a system with crypto technology. So I just shared the URL so that people read the details, but the baseline is that if you're in the US, yes, you can use their solution as are doing many companies already at the moment. If you're outside the US, you have to wait a bit longer before financial regulators make it possible for Fermin to expand the solution.
All right, we have a question from Seish who is asking, what's the earliest stage that you've accepted a startup in the family, and what's the latest? Balt, I know you want that one.
Yeah, I can take it, and then there's an interesting conversation going on in the comments, and I think it would be cool if Nicolas addressed it, even if indirectly, because you wrote an entire book on reimagining a safety net, and we're getting some comments on the fact that Deliveroo is a return to Zola. And even though I think the intention is pretty nefarious, I think it would be quite cool to get your take on this. And then just to quickly reply to Seish's question before that, the earliest we've accepted a startup at the family is as early as inception. Typically, in the case of Charles, which is a men's health business, Balthazar had an obsession with a model that he really wanted to see and had been speaking about it for quite a long time to a lot of founders. And then one day he met Charles's founder, Simon, and they got along really well. And Balthazar completely forgot for 50 minutes of the 1 hour long meeting that was what he wanted to talk about, or maybe he didn't forget and only kept it for the end. I don't remember what the story was. But at the end of it, he was like, "Oh, by the way, I've been thinking about this. Do you think this is something you'd be interested in?" And then Simon was like, "Oh, that sounds super cool." And then he brought in one of his best friends, Olivier. So I'm guessing you can't really do much earlier than that. And then on the other end, the latest that we've done, I don't know. I guess it might be actually Lupa in our current batch. I don't know if you have an idea of something later, but we have a company in our current batch which is building a model that's like Open Doors model in Southeast Asia. And so they've already bought and sold hundreds of houses and done millions in revenue. And so they're definitely among the later stage companies that we've worked with. I don't know if Belgium have any later companies in mind.
We also worked with a lot of companies that were at the Series A stage. And what we've seen is that we actually have a very long-term relationship with the founders. We start working with them with a 6 weeks program, but then the relationship we built is actually helpful on the long term, whether it's raising the Series A, going international, raising further rounds. So there's basically no earliest. The earliest, the better. And as of how far along you are, it depends a lot on the needs that you have.
Yes, I'm happy to answer Matthias's question, which is, what about the social contract? Does more startups translate into a miserable life for the majority of us? So it turns out, as you alluded to, that I wrote a book 2 years ago, almost 3 years ago actually, about reinventing the social contract for what we call the family, the entrepreneurial age. And the reference, as you can see by the blurb that's written on the cover of the book at the bottom, is the work of a renowned economist called Carlota Perez, who's read by basically every major venture capitalist on earth, because she's been explaining in her book 20 years ago that every technological revolution goes through two phases. The first phase is that dominated by entrepreneurs and investors who make a lot of money, because there's the first generation of people that actually understand that you can make money out of this new technology that almost nobody understands at the moment. And then when it finally becomes clear that this new technology is about to transform every industry, every sector, every dimension, from production to consumption to work to everything, then finally most of the people start understanding the paradigm shift that it's all about. And then you can start building new institutions to make economic growth more sustainable and more inclusive. And that's exactly the tipping point we're reaching at the moment, with a lot of people being angry at tech companies. And this anger eventually translates into people reflecting on how can we make things better. And this conversation about building new institutions for a more digital economy has been joined recently not only by intellectuals and scholars and activists, but also by policymakers for a part, although there are not enough of them participating in that discussion, but also by tech people themselves, who realize that what they're building can have adverse consequences in many dimensions, and has effectively contributed to electing Trump and getting everyone angry and so on and so forth, and rising inequalities. And so that's why you see a lot of investors and tech CEOs joining the conversation. They might not be the best at finding the new institutional solutions to solve these problems, but at least they're contributing with a deep understanding of the new business models and the new approaches to production and consumption that technology brings about. So we've been working on it for many years. We know that everything's not perfect in the world of startup, but we're also willing to provide solutions to contribute with ideas and solutions. That being said, I must add, because that's always what I say, it's that it's not up to tech people to build new institutions, it's up to governments. And so as long as governments are not interested in that, are not realizing that we're going through a paradigm shift, are not interested in studying the new approaches that we could embrace to build a more inclusive economy, then we can't do anything. So we're really waiting, us tech people, for governments and policymakers to join that conversation, and the sooner the better.
Cool. Another question from Sage: do you see yourself accepting more fintech startups that would leverage the DeFi movement that is taking over lately, or are you industry agnostic?
I think both are true. We would love to attract more crypto startups, and if you have a crypto startups, don't hesitate to apply. Even if I still not really sure what DeFi is, but I'm sure Balthazar and Matthias will know better. But yeah, and also we are happy to attract them because we are industry agnostic. We are more interested by our relationship with the founders than whatever we do. What we do at the family is that we support people more than project, and we are always happy to learn about the subject. I think one of the big misconceptions about the family is that people imagine that we are here to provide advice about the business, but most of the time we learn about the business working with our entrepreneur. And that's why, by the way, it's such an interesting job. It's because we have so many private teachers on so many different subjects. So it's a dream if you like to learn things. But what we want is to provide ambition, we provide motivation, we provide, if we are excited about something, we are ready to do whatever it takes to make it successful.
Balthazar, there's a question that I think you'll have a cool take on, which is, what do you think about Cajou raising 6 million on idea and team? And not particularly on the Cajou example, but just in the brutally unequal world that is the early stage fundraising world.
Yeah, so for people to understand, Cajou is an e-grocery startup with a full stack model, meaning that they have warehouses in which they they're basically a supermarket that delivers with a reduced inventory and short delivery times. And it happens that in the US, there is a company called GoPuff that raised at a 3 or 4 billion valuation and has really successful unit economics and a really cool growth. So that got investors all around the world very excited. And because the model is supposed to work, it's also relatively local. They are really bullish on building a GoPuff for the rest of the world. So there is a company in France that raised a lot of money, a company in the UK, 2 companies in Germany, and basically one in each developed market. And I think investors are that bullish on the model, first because they know the model works. At least it's supposed to work in the US, so it should work here, which I'm not entirely sure because the logistics in very dense is quite different from other cities. Second, because the potential people to acquire those businesses are very easy to see. Every retailer would buy a verticalized supermarket that does delivery, whether it's Carrefour, Walmart, or someone else. If the American competitor were to come in Europe, they would probably also buy the incumbent. So the risk on the low side is not very high. And then what investors do is they typically invest in a team that is proven at execution. So if you look at all the companies that raised on that model, it's people that already built a successful startup before, and they see an opportunity here with no risk of product market fit. So they just raise a lot of money and execute on a plan. And the goal is to go as fast as possible to gain market share. And so I don't know if it's crazy or not to raise that much. I think it's just the reality that you can hope for when it's not your first business and when you have a clear opportunity on the market.
Yeah, we have a question from Ari who is asking, could you please recommend good and practical book or workbook on how to build a great culture in your startup? The first one that I've been top of my mind was the one of Jessica Livingston from YC. She runs a lot of interviews. The name is Founders at Work, and she's been interviewing all the founders from Apple, Microsoft, Google, Flickr, PayPal. And it's really, I love her approach because it's very candid in a way, the way she asks the questions, and very profound in what you learn from all of these paths. And you see how beginners these people have been as well in the beginning. For me, it was very inspiring because you have access to the personalities of these founders, and the culture starts with understanding the personality. Then there is another book that I've loved more for me, for myself, which was called Radical Candor. Be a kick-ass boss or something like that. And the author is a coach of CEOs. I don't know if it's a girl or woman. I don't remember if it's a woman or a man, but the author was a coach for the CEO of...
It's Tim Scott.
Yeah,
It's a
exactly.
man, Kim
Yeah.
Scott. Yeah.
Kim Scott was the coach of Twitter and Dropbox CEOs, and it's a lot of very practical things. And yeah, I would say these two books, and maybe just to help you make decisions, but it's not really on culture, but more on making decisions every day. The best book is A Hard Thing About Hard Things from Ben Horowitz.
Yeah,
By the
actually,
way,
Horowitz wrote a second book. What You Do Is Who You Are, which is exactly about building a great culture in your startup based on on various interesting examples. One is Toussaint Louverture, who's the great leader who freed the slaves in Haiti, what became Haiti. Another is a guy named Shaka Senghor, who was the head of a gang in an American prison, and so how he maintained a culture within that gang and made it possible for its members to survive their terrible experience in prison. And so it's a great book. And obviously Ben writes with the eye of an investor that's currently invested in hundreds of companies, and so he really relies on the real life experience of startup founders.
There is a cool question from Garnero: how to meet co-founders, or at least people to exchange with at the moment. And we do an event actually, Garnero, called Be My Co-founder, that you can join. And the goal is only to meet with potential co-founders remotely. And we've run this event for the last 6 months, and it's really fun. It's a lot of quality in the participations. I think we sell it something like 49 euros the entrance, and you have access to at least 20 other profiles that you will have a conversation with, and you can keep track on the conversation you've started. This is one way. Another way, of course, is to join this kind of workshop that we're hosting on Thursday. We always keep a moment to have a chat roulette at the end, so you can talk with other founders, because the people there are young startups and always open to meet with other potential co-founders, or even people thinking of starting their companies. I would say join all of these online events that are run by the family or other organizations helping startups, because we have more and more these possibilities, these options with the tools to organize encounters. If you have other options, guys, or ideas to help Garnero, feel free to join and to answer. Nope? All right. Cool. Guys, we want to respect the timing. And Dalian, I have to say, your shirt has been like really loved in the comments.
Yeah, I know. It's hard to be a trend leader. Like I'm always surprised about.
When you were on stage, when you're on stage, you could show off your non-matching shoes.
And, yeah, I know.
And now that people don't see your feet, you have to do something else for people to notice you.
Yeah, I have to have non-matching shirts.
Okay, what can we wish for the people on this week?
What we can wish for people in this week: to stay healthy.
Yeah. To stay happy. It's so hard these days to keep your level of happiness.
Yeah. It's hard
to stay happy, everyone.
How do you stay happy?
Happy and healthy.
Yeah, but stay connected with people who are optimistic. I'm sorry, but optimism attracts happiness, really.
And I don't know, I see some of the comments on the site, and I think some people need to really relax especially about conspiracy. I realized that being alone at home with these COVID things makes a lot of people conspire. But if COVID teaches all something, is that nobody knows anything about nothing and nobody controls anything. And I think that's the hardest lesson to take this year.
I love this conclusion. See you next week. Thank you, guys.
Bye, everyone.
Bye-bye.
Bye-bye.